Imagine opening your trading app on a Monday morning and seeing a little followed deep sea mining stock suddenly flashing bright green, up nearly 30% before lunch. That is exactly what happened with TMC, the metals company, ticker TMC, after the firm announced an $85 million cash infusion from one of Asia's biggest specialty smelters, Korea Zinc. By the closing bell, TMC's shares had surged 28.8% to finish at $5.59, their best single day performance of 2025. So, what set this rally in motion? In the pre market hours, TMC revealed a strategic agreement granting Korea Zinc nearly 19.6 million newly issued common shares at $4.34 apiece, an 11% discount to the previous close, plus a 3-year warrant to buy another 6.9 million shares at $7. If the warrant is exercised in full, total new capital could eventually exceed $133 million. For now, the firm pockets $85.2 million in fresh liquidity, enough to extend its cash runway well into its next development milestones. The partnership does more than strengthen the balance sheet. It also reshapes TMC's shareholder base. On settlement day, June 26th, 2025, Korea Zinc will emerge with roughly 5% of TMC's outstanding equity, making it one of the company's largest strategic holders, alongside early backers Allseas and Maersk. That vote of confidence resonated with traders who had been waiting for a credible industrial player to endorse TMC's controversial business model, harvesting polymetallic nodules rich in nickel, cobalt, copper, and manganese from the Pacific seabed. Why would a Korean refiner want nodules scooped off the ocean floor halfway around the world? The answer lies in the electric vehicle supply chain. Korea Zinc already produces precursor cathode active materials, or PCAM, a critical intermediate that turns raw nickel and cobalt into battery-ready powders. Access to nodules could secure a long-term, low-carbon feedstock at a time when governments, particularly in the United States, are pushing for supply chain transparency and localized processing. In fact, Korea Zinc's news release notes that its R&D team is already running pilot tests on a bulk sample provided by TMC USA to validate refining routes and quantify potential cost savings through vertical integration. The partners even floated the possibility of building full-scale processing and eventually PCAM manufacturing on U.S. soil, a move that would tap federal incentives aimed at reshoring battery materials. For TMC, this is more than just a capital raise. The company's roadmap, laid out in filings with the Securities and Exchange Commission, calls for first production from the Norai D nodule field as early as 2027, pending a mining license from the International Seabed Authority. Financing that timeline has always been the elephant in the room. An early-stage resource project that floats several thousand meters above its ore body does not come cheap. By securing an equity partner with downstream expertise and a balance sheet capable of underwriting future plant construction, TMC reduces both funding risk and future customer risk in a single stroke. Market reaction was swift. The stock's average daily volume of a few 100,000 shares ballooned into the millions, lifting TMC back above the $5 mark for the first time since February. Momentum traders swooped in, pointing to the $7 warrant strike as a short-term target, while long-only investors applauded the deal's minimal dilution and strategic heft. Of course, skeptics remain. Environmental groups continue to challenge seabed mining in international forums, and the company still needs to secure both regulatory clearance and the massive offshore vessels required to lift nodules at commercial scale. Nevertheless, Monday's price action underscored a simple truth. The promise of secure, low-carbon battery metals is powerful enough to draw big checks from established industry players. For Korea Zinc, the $85 million bet buys optionality in a frontier resource play. For TMC, it delivers validation, visibility, and a headline-grabbing jolt of momentum. Whether that will be enough to carry the stock through the permitting gauntlet remains to be seen, but for now, the market has spoken, and it likes what it hears.